Good morning and welcome to the Blythe Way Mining Show, brought to you on Core Finance. I'm Charlie Gibson. Now, sometimes London gets a bit of criticism as being a difficult place for mining companies and for their investors. But one of the notable exceptions to that is Central Asia Metals. Now, Central Asia Metals, or CAML, as it's often affectionately referred to, came to the market, best part of 8 years ago at a price of 96. It's currently trading over £2, around about £2.32. So, as the Americans say, I'll let you do the math, but there's a pretty fair uplift there. And they just had their interim results. Joining me is the Chief Executive, Nigel Robinson. Nigel, good morning.
Morning, Charles.
Thank you very much indeed for joining us. So tell us all about your results this morning.
Oh, morning, Charles, first of all. Delighted to announce our first set of 6 months results for 2018, which have incorporated a full set of the SASA operation, which we acquired in November 2017. These results show that we're on track for our production guidance this year. At the first 6 months of this year, we produced 6,747 tonnes of copper from Kounrad operation, which we've now owned and operated for over 6 years. And at SASA, we produced 11,020 tonnes of zinc in concentrate and 14,386 tonnes of lead in concentrate. So our production is going in line with our expectations. In terms of the financials and what that delivers to our shareholders, we've had a great performance in the year whereby for the first 6 months of this year with good metal prices, the revenue's been 102.4 million compared to 38 million in the previous period in 2017, and delivering an EBITDA of $64.6 million against the previous EBITDA of $24 million. So you can see there's great difference and great improvement in both the revenue and the EBITDA numbers.
Dividend?
The dividend on the back of those numbers and the strong cash flows that we generated from both the operations now, we're going to announce at 6.5 pence, which matches the dividend we paid in the first half of 2017.
And then what about the full year? Would it be what's your dividend policy? Do you have sort of a 1/3, 2/3 policy, or does it depend on each half year's cash flow? Or
well, interestingly, when we acquired the SASA mine, we changed our dividend policy, which previously was a policy based on the revenue at Kounrad when we only had one operation. Now that we've diversified both in metals and in geographical area, and we've grown into a far larger and more complex organisation, we felt that we had to have a different revenue policy. Our policy is now based on cash flows. We've committed with our shareholders that we'll pay back 30 to 50% of the free cash flow generated from both operations to the shareholders. And based on the numbers that we've got at the moment, that 6.5 pence interim dividend is within line with that policy.
So if you were to do the same for the full year, and I'm just, as they say, spitballing here, and you had the same for the second half, and that would be 13 pence, you would be yielding, you'd be yielding something over 5%?
If we were to pay that, we'd be yielding certainly over 5% on the current share price. The share price is slightly depressed at the moment with the market conditions we've suffered over the summer period with the so-called Trump trade wars. But yes, at the current share price, that kind of dividend payout would be a dividend yield of just around between 5 and 6%.
So let's talk about two things. First of all, the second half of the year. Now, you've alluded to this so far, but metals prices have taken a reasonable knock since January of this year. Copper, zinc, lead amongst them. What are your feelings for the second half?
Certainly, as you say, the market has softened since the turn of the half year. In the first half of the year, we enjoyed good metal prices. We realised copper prices of close to $6,600 per tonne, and zinc and lead prices, a zinc price that was over $3,000 per tonne and a lead price that was close to $2,400 per tonne. We've seen a significant softening. If you look at spot prices now, lead is closer to $2,000 per tonne, and zinc is off by about 18% from that at $2,300 per tonne. But our business model is very much based on ensuring that we hit our production guidance and make sure that our operations are at a low cost, so it's that we can survive at whatever, effectively, lower metal prices dependent on whatever the market does. So our cost of operation at Kounrad is 53 cents per pound of copper, and at the SASA
and that compares
operation
with the price of copper for those who don't work in cents per pound.
Yeah, you're right, it is confusing at times. 53 cents per pound is around about $1,100 per tonne. So if you were to go back 10 years to the great financial crisis, almost 10 years ago to the day, I suspect, copper at that stage reduced to a price, I think the lowest it ever went was about $1.30, which is about $2,800 per tonne. So even at those very low prices, over the cycle we would remain profitable. And that's our business model really, to remain profitable throughout the cycle. And if you take that 10-year cycle, both operations, both Kounrad, which is a well-known world-class low operating asset, and the Sasa mine that we acquired last November, which we acquired on the basis that it's a low-cost operating unit. The C1 zinc equivalent cost that we quote there is 44 cents per pound. So even 10 years ago when prices were very low, zinc, I don't think, traded much below 50 cents per pound. So it would then become marginal, but I think a lot of other people will be in more distress than we will be at the time.
And what about the trajectory of production? Is that going up, or is it fairly flat?
That's a good question. Certainly at Kounrad, we discussed with our shareholders, so it's effectively that operation is fully developed. So the output at Kounrad has been 14,000 tonnes for the past 2 years. We have a guidance this year of 13 to 14,000 tonnes, and that's effectively flat. At Sasa, it's early days for us. We've now owned the mine for almost 10 months now, and we're doing a life of mine project, which will look at trying to optimise the output. But in round terms, we may expect some increase in output, but nothing of a doubling of output, for example, or a 50% increase. We'll be looking at optimisation. At the moment, our guidance for zinc is 20 to 22,000 tonnes, and for lead, it's 28,000 to 30,000 tonnes of lead. We may look for a 5 to 10% increase, but that's dependent on what the study determines effectively. So effectively, we are flat on both of those projects, but as I reiterate again, they are low-cost operations which will make money throughout the cycle.
From memory, when you bought Sasa, you took on a chunk of debt, which presumably you're in the process of paying back.
Yes.
Paying back in line with your expectations?
We are, absolutely. We're paying back the debt in line with expectations. At the time, just to remind viewers, we took on approximately $187 million of debt through two products. We're now down to $166 million of gross debt on that. So in the 6-month period we're reporting this morning, we've paid back just under $17 million of debt. And our cash balances at the moment are $40 million. So a net debt balance of about $125 million, which in terms of ratios to EBITDA is certainly something which we're comfortable with as a board.
From memory, Kounrad, which is a sort of dump retreatment operation, if I were to characterise it like that, you have to move dumps. Am I right in thinking you're more or less in the process of moving dumps at the moment?
If you don't mind, if I could just correct you slightly, we don't actually move the dumps.
Yes,
we work our way around
the operation,
the dumps,
from one to another.
Yeah, so about a third of the resources in the eastern dumps and 2/3 in the western dumps. We've been operating primarily in the eastern dumps since we started in 2012, April 2012. And we've more or less exhausted the eastern dumps. We've probably got about another 2 to 3 years life left in the eastern dumps. We did start last year transitioning out to the west, and this year, in the first half of the year, approximately 60% of our copper came from the western dumps, and we expect that percentage to increase over the years until eventually we're just primarily leaching in the western dumps, and that is about 2/3 of the resource. The life of mine on that asset is certainly in excess of 15 years, and most of the production will be from the west in the future years.
Well, and was there a noticeable metallurgical difference between operating on the eastern dumps and the western dumps? Because you run a very fine metallurgical balance, don't you?
We do, you're right. And when we inherited the assets and acquired them from the Kazakh government, the eastern dumps were classified as oxide dumps and the western dumps as sulfide dumps. Now, in chemical terms, sulfide dumps don't generally leach very well, but with the exposure to the oxidation of the atmosphere, effectively, the acid-soluble content of those dumps has become almost the same as the east. So the recoveries, while slightly less in the west and a slightly longer leach period, we are confident that we can recover the copper from them. So there are differences, as you rightly say, a longer leach time, lower recoveries, they're higher dumps, but in terms of the planning and the test work we did before we went to the west, we're confident that we will recover that copper in line with our plans.
And have you tested that? From what you say, it sounds like the oxidation is an atmospheric effect. Right in the middle of the dumps, you're finding it's the same thing.
Yeah, we have been leaching there now for well over a year. We started in April 2017, and the leaching is very much in line with the leach curves that we have for each of the blocks as we, as you say, move around the different areas of the western dumps.
How are you finding, jumping now to Sasa, how are you finding operating in the Balkans? You've had what, best part of of a year operating there now?
We've had a year operating there. It is different from Kazakhstan. I don't mind saying that. I mean, the politics are different. It is more of a democratic country, and it's going through growing pains, I suppose, in some ways. But it's certainly from an operational point, one of the things that attracted us to the mine was a low operating cost environment and a low capital cost environment. And the workforce are very technically skilled in what they do, and the delivery, which is, from the results we've produced this morning, effectively show that mine is on track, and we're looking at optimising the output from it. So there has been a learning curve, yes, but I think what we inherited and what we've bought, we're very pleased with.
You've now been in the Chief Executive's chair for, about 6 months?
Approximately 6 months.
How are you finding it?
It's a challenge. It's interesting. I'm following a very hard act to follow in many ways, in Nick Clark, who many people in the mining industry know, who was our CEO and I worked under for about 9 years as his CFO. So it's very challenging, but it's very exciting, and it's good fun. And we've got a lot to do, but I'm looking forward to the challenges.
So come on, give us a clue. What are your big plans? Well, if we were to look at Camel in, I don't know, let's say 5 years' time, how does it look different from today?
That's a good question. I mean, very much in the short term, it's very much business as usual. I mean, one of the things that I think went down well with the marketplace, that we put in place succession planning. So it is continuity. There's not a major change. I mean, I've been instrumental in the way Camel has developed from the early days when we IPO'd almost 8 years ago. So I've been part of the senior management team and been part of driving that strategy forward. So very little change, very consistent. Obviously, we had, when we acquired Sasa, a keen focus to make sure we integrated it into the way we operate Kounrad. We're coming. You never really get a black and white date when that is finished, so to speak, but we're very much getting towards the end of that. We've put in place a good management team that we work with closely now. We've taken on a chief operating officer, so we've bolstered our technical team. Gavin Farrar has moved up to CFO, so I've got a very good team around me. And really, the goals in the short term, as I say, is to finish off that integration, which we feel we've done now. Make sure that health and safety is good, make sure that the production is in line with the guidance, make sure we control the costs, and we will be starting to look in Q4 of this year at new opportunities to grow the business beyond where we currently are.
And does that mean another acquisition, do you think?
Potentially, yes. Yes, it does. I mean, it's difficult in mining. I mean, you can't just grow the business that you've got somewhere where you choose to grow. You are determined very much by the geology and the geography and where the assets are. And it took us 3 to 4 years to put our finger on Sasa, and eventually we did. So we're not in a rush to do it. We're not going to grow for growth's sake. We will grow based on something which will add value to the business and which is right for the business at the time. So we'll take our time over it, but we are certainly moving back into a growth phase for Camel.
Do you have a geographical preference?
Not specific. There's probably certain countries we wouldn't touch. But generally, we look, and I would say probably the preference from the board, and certainly my own perspective, would be to stick with the areas we know well, which is Kazakhstan, which is probably Europe. We do look in Africa, and we have in the past looked in South America, in Chile, and the South American countries. We probably steer clear of a few countries, but generally we're pretty open to where the assets are, and it's what the asset's about as opposed to where it's physically located.
All right, Nigel, thank you very much indeed. We wish you the best of luck. And come back and tell us about your full year results in 6 months' time, and anything else between now and then.
Okay.
Excellent. Thank you very much indeed. Ladies and gentlemen, that was Nigel Robinson, the Chief Executive Officer of Central Asia Metals, affectionately known to all as Camel, and one of the notable success stories of the London market over the last, let's say 8 years, rounded up. That's all from me. I'm afraid Charlie Gibson on the Mining Show, brought to you by Blytheway. We'll be back next week with more such opportunities, we hope, and until then, you have a very capital day.